Hey everyone, I am Elaine Lowe. I'm a staff writer at The Ankler. I write the series Business Newsletter and host the Ankler Agenda podcast, where we cover all things about the TV industry and the entertainment industry. And today we're going to focus on the trends shaping M&A in the media and technology space, what we can learn from recent acquisitions, the regulatory environment, and what deal makers should consider as they're thinking about buying, selling, or staying independent. So let's introduce our esteemed panelists here, starting with Tom Ara. He's a partner in Wiles Private Equity Practice, leading its entertainment, sports, and media sectors. He advises entities ranging from private equity firms to institutional investors to Hollywood studios on M&A and corporate and commercial transactions, including Disney's $71 billion acquisition of 21st Century Fox and talent agency CAA on strategic matters. Next to him is Eric Hodge, a partner at Rain, leading its entertainment group. He's played a key role in major investments and advisory transactions, including Skydance's deal with Paramount, and has worked with major companies such as Endeavor, Candle Media, Universal, and Warner Brothers. Fred Turpin, our last panelist over here, is the Global Chair of Investment Banking at JP Morgan, focusing on the tech, media, and telecom space and global infrastructure. He's worked with everyone from Univision to T-Mobile and more recently advised Warner Brothers Discovery in the takeover battle between Paramount and Netflix, which seems like a pretty good place to start if we're talking about M&A and entertainment. I know you all have various past and present professional entanglements. There's only so much, that we can sort of talk about here, but it is the biggest merger on the horizon. And I'm wondering what you think it says about the state of the entertainment industry, that Hollywood has seen so many waves of consolidation over the last 7+ years, from Disney Fox to Amazon MGM to Paramount Warner's now. There's been a lot of consolidation on a very large scale these past 7 years or so. What do you all think?
Well, scale's never been more important in entertainment. And, we used to think about scale as, studios and gaming and music and sort of all these individual slices, but increasingly they're just bigger slices. And and I've been saying this for 7 or 8 years, it hasn't always been popular, but I think we're going to recreate broadcast television on multi-platform, uh, on-demand entertainment platforms. And maybe there'll be 4 or 5 of them, and Netflix has obviously got a seat at that table, Disney's got a seat at that table, Amazon's got a seat at that table. I think Warner Discovery, Paramount has a seat at that table now, assuming the deal closes. But, there are 10 or 11 other players that, are trying to figure out where they're gonna sit when the music stops, and, it's gonna be complicated. But I do think that scale has never mattered more, and everybody is trying to acquire it. The industry is spending $180 billion on non-sports content creation today. That's double what it was 7 years ago. And there's a reason people aren't making a lot of money anymore. It's because they're spending a lot of money to attract customers on a multi-channel environment and a subscription environment as opposed to traditional cable. My guess is if you could get this down to 5 platforms, they would do better on advertising. They'd have broader bundles of content to offer, and they'd probably be able to charge more for it, and reduce the amount of annual spending on non-sports content, and profitability would go up. And I think that's something that the industry probably needs.
What about you, Eric?
I mean, I think if you look at it, 10 years ago, there were 12 companies that were greater than $5 billion that were pure play media companies. Today, we're down to 6. And to Fred's point, there's probably a couple more to go. But the math has changed, right? You look at the business that we came from, the cable bundle, 40% margin business, less than 0.5% of churn. And where we are today, the margins have shrunk in half, and churn, Netflix is at 2%, but that's still 3x what the cable bundle was, and the next one above that is at 5%. So all of this stuff needs to get sorted, and this is an instance in M&A where consolidation is being driven by business needs. It's not being driven by low interest rates or differential valuation. It's a business has fundamentally changed, and the economics dictate big moves. So that's what we're seeing at the top, in those greater than $5 billion companies.
What about you, Tom?
I must be next. Um, yeah, so I think from my perspective, I've spent 3 decades of my career trading intellectual property assets, right? And I think the last 2 decades, we've seen a tremendous amount of consolidation of very valuable IP. And I think the consolidation that's happening, the scale, very much is driven by very valuable IP that's been acquired. That's why Disney paid what it paid for Fox, why, you're seeing the Paramount Warner Brothers combination resulting in a very substantial intellectual property catalog. And I think for a while we were talking about, well, is distribution the new king? Because content was king as the crown, changed heads. And I think that quality IP remains at the top of mind for all of the major players. And I think this consolidation very much is driven by that. And the statements that have been made by the parties who pursued this transaction and others like it very much are driven by that catalog. I need my hands on that catalog of IP. And so that's the perspective I see it from.
So you've all mentioned some of the driving factors behind consolidation, between the IP and the various business interests at the top level. I wonder, could you put it in context for us of how you view M&A as a characterization of the health of an industry? Most people who work at companies like Paramount and Warner's are going to be viewing this merger quite negatively because of anticipated layoffs. The people who make TV and movies are worried when there's one less buyer on the market. Is there ever a scenario where one company acquiring another on this scale is a good thing for the industry or any industry?
If you look at a lot of the deals historically, the question is what would happen if they didn't, right? What would happen if Scripps and Discovery didn't merge?
Yeah.
You could look at Disney and Fox, right? And that's you look at from the moment that deal closed to today, the stock is actually down 10%. You look at Fox, the standalone company, it's actually up 10%, right? But you have to ask yourself what would have happened to both of those businesses had they not merged. And the industry is changing, right? Like it's the margins have changed, consumer preferences have changed, the things that people can spend their time watching has changed. It's gotten more complicated. So it's not I wouldn't say it's the driver of these things. It's the byproduct of what's happening in the industry. And I think, frankly, like had a lot of that M&A not happened, you would have seen some really bad outcomes along the way.
Yeah, I mean, the industry has fundamentally been restructured in the last 7 or 8 years. I mean, for better or for worse, right? It's been fantastic for the consumer. I mean, we are in the golden age of entertainment by any objective measure. The amount and quality of content that's available on your device, on your iPad, on your phone, on your smart TV from multiple platforms, of quality that those of us who are my age could never have imagined in a world where there are 3.5 channels and every Tuesday night you got to watch, Saturday night or, Laverne and Shirley or whatever. I mean, it is fantastic from a consumer perspective, but it is expensive to bring all of this to consumers on demand and multiple platforms. And frankly, folks haven't charged very well for it because it's so competitive. And there needs to be a balance between their ability to price and deliver and actually make money or some kind of return on their shareholders, because all of these stocks are down dramatically in the last 6 years compared to when media stocks were very, very high. I mean, it's been great for consumers. It hasn't been great for shareholders.
What do you think, Tom?
I don't really have a lot to add to. I mean, I think the perspective of the necessity for it, as Eric was describing, I agree with, and I also think that there's certainly M&A that is not just out of necessity because of the changing business, but because it actually adds value back to the IP. I mean, you think about Disney going back to acquiring Marvel and acquiring Lucas. I mean, these are all incredibly accretive acquisitions for Disney as a company, but to that IP, think about the incredible IP that came out of that acquisition and the value that was created both for the franchise itself, but for the enterprise as a whole.
And, Tom, you focus primarily on sports and talent management. There are a lot of celebrity-led sports production houses and media companies. I'm thinking of like your Omahas and your Spring Hills. What kind of environment do you see for that space and through the lens of M&A over the next few years?
Well, I think I do spend time in sports, and I actually spend quite a bit of time at the intersection of sports and content. And I think the interest there is we all love our favorite sports clubs and franchises and teams. And so we are all very amenable to consuming more content after the game's over. And I think that's where you see these athlete led franchises and organizations come together where they know that and they know whether it's the talent that you want more of or the particular sport. I think that that's just considering that live sports is really the last bastion of, live watching in many ways. I think that appetite for further content after the game's over is still relatively untapped. And we've seen this I spend time with the F1 team. I have one of my clients is one of the F1 teams. And I've seen how, Drive to Survive then led to the popularity of, the F1 movie and of course the sport, even greater popularity. And I think that's an area that we're going to continue to see growth in, investment in, and interest in from consumers.
What do you think, Fred?
Well, is there any end to the increase in sports rights? Just back to the comment earlier. I also don't think entertainment is not vertical software. Everybody's concerned about the threat from AI. And AI, like any technology, is going to change the creative process and what consumers look for and how it gets delivered to them. But at the end of the day, this is going to be, in my opinion, a continued evolution of the creative process and in entertainment. Whether you're in the Colosseum in Rome, in an open field in Woodstock, whether you're on a backlot at Universal, or whether you're at the Sphere, right? For 2,000 years, humans have wanted to be entertained. They've wanted to be entertained live, and they've been interested in the evolution of entertainment. I think AI is going to enhance a lot of this. It's going to change some of the creative process, but the entertainment industry, in my opinion, is not threatened by AI. We work in a lot of industries that truly are. And, I actually think that that's a real positive. It doesn't mean there's not going to be change, and it doesn't mean that entertainment in 10 years won't look different than today. But creativity and the desire of people to be entertained hasn't changed a lot in the last 2,000 years. And I don't really expect that that's going to be different over the next 20 years.
Well, I wanted to talk about AI later, but let's talk about it now. Fred, you said that you don't really see AI being as much of a threat to the entertainment industry as some other industries in terms of, the immediacy of it. How do you see AI impacting the entertainment space?
You've seen tech companies come out in the last 30 days and basically say that 10% of their engineers supported with AI can do twice the work of all of their engineers. Right. Snap laid off 15% of their workforce. Right. And there are other guys who've laid off 25% of their workforce in tech. Like, can AI generate images and cartoons and entertainment, for lack of a better word, better than a lot of humans in a lot of particular verticals? Yeah, maybe. But at some level, somebody's got to grab a guitar and stand in front of people and play. Maybe it's an image of a human, but it's going to be a human, right? Somebody's got to stand in front of that camera and actually make those images that are going up on the screen. And, perhaps there'll be more pixelated imagery. And, some people have come up with some clever ways to, make it more digital. But the demand for entertainment, and you see it in sports, right? And one of the reasons is because people want to advertise on live sports because they know that they'll get eyeballs. But the demand for entertainment has never been higher. And I don't see it going down, particularly if people have less to do because of AI. There's a reason that the Romans kept peace in Rome by providing food and entertainment because people want it and they're going to pay for it. It may look a little bit different in 5 or 10 years than it does today, but it's going to be around. And people who are nimble and creative, I think there are always going to be opportunities for that.
There's also a flurry of AI startups in AI fueled companies right now in the entertainment space. Is that an area that's ripe for consolidation? I'm thinking of deals recently in the headlines like Netflix's acquisition of Ben Affleck's Interpositive and wonder what we can expect on the horizon.
I mean, I think it's too early at this point to see what's going to happen. But to Fred's point, AI on all sides of the equation can be really interesting and really additive to Hollywood. Hollywood has always been disrupted by technology and developed technology that disrupts other industries. But when I look at the job of a creator, you talk about athletes right now, anyone can be a creator. And the tools that AI will enable in that are really mind blowing. And if you're a young person who wants to come to Hollywood and make content, the difference in today versus 15 years ago, I would argue today is a much better time. And it's only going to get better as you have better tools to express your creativity. So I love seeing all the startups that are coming along and seeing what they're doing.
Yeah, the way I describe it is the internet democratized distribution of content. AI democratizes the creation of content, right? Because if you're that athlete or any other individual creator, you can make incredibly quality content with the aid of AI in ways that you couldn't do 10, 20 years ago. Even if you had the distribution outlet, you can make your YouTube UGC video, but it was like, somebody standing in a room and, talking about whatever product or, interesting topic. But now it's much more complicated and interesting than that. I also think there is a bit of perception versus reality and with Hollywood, right? I think the perception among many is that it's much more threatening than it really has been to date. That being said, I do think it's been disruptive already and will continue to disrupt certain segments of our industry. And I don't want to turn this into an AI panel, but I think I've been quoted as saying that AI will be disruptive, and I still believe it is, and will continue to be. I think it's game changing in ways that we haven't even been thinking about yet.
And you mentioned the creator space. Eric, I know you have a particular interest in YouTube and the creator economy. It strikes me as a bit of a wild west right now in terms of just how many creators there are, but also we've seen so many success stories that have turned into larger production companies like Mr. Beast. What are you seeing on the horizon in the creator space? Is that an area that you think is ripe for consolidation as well?
So there's an enormous amount of viewership on YouTube. And if you look at the corporate deals that have been done, there's very few, right? There's, I think, maybe a handful that you can think of that are over $500 million deals. A couple changes that have developed over the last several years. Number one, 40% of viewing is now on the screen. It's not on your phone. It's not on your laptop. It's on the screen. So it is television, right? Number two, the demographic where there's the most growth is an older demographic who are used to watching traditional television. I saw somewhere for baby boomers now YouTube is up to 20% of their viewing. So that will change. That will continue to evolve what's on screen, and I think you'll see companies that look just like the ones we saw in the past that were studios and TV companies now doing it on YouTube, making better economics, owning their IP, and building real enterprises. So it's something we're very excited about and watching, but it is still on the early side in terms of real companies being built.
Mm. And you had a hand, talk to us about Moonbug.
Yeah, so Moonbug was based on a thesis that, in particular, kids were watching in different ways than they had in the past. They weren't watching on Nickelodeon anymore; they were watching on YouTube, and there were creators that were kind of doing it from their basement at not maybe the highest level of production quality. And if you put them together, you could bring best practices. You could help them with licensing. You could help them do bigger deals with Netflix. And that's what we did, is literally from scratch, one by one, pulled together, I think 10 companies, 10 plus companies, and turned it into a pretty big enterprise. So I think that trend, finding that in other verticals, is something that will happen in the future and something we're very focused on.
Fred, what's your outlook when it comes to the creator economy, when it comes to the social and digital spaces?
So I'm not especially creative, but one of the things that I think is useful to keep in mind with all the democratization and change and distribution capabilities, I know we're always very focused on this generation of creators and what the future, what now is going to look like and what the next 5 years are going to look like. But one of the things that digitization and on demand provide is opportunities for the past, right? Let's just think about music. If you wanted an obscure well, that's going to be a bad example. Pick a band that, is kind of a mid-level band from 15 years ago. Good luck finding that album. Good luck finding that cassette. Good luck finding that DVD, right? But now it's available. It's all available. And you can buy that Fleetwood Mac album that nobody's heard, or that song that you love that hasn't been played on a radio in 30 years. It's available at your fingertips, and somebody can monetize that. And it's one of the reasons that rights, have gone up in price. But it's not just about what we can create that's new today. Some of this technology is actually allowing the historical legacy creative environment to better monetize art that was an IP that was developed 20 years ago, that actually has an audience, can actually be remarketed. And now there's a way to do that efficiently because you can actually deliver the art in a way where you can get paid and it can be enjoyed. It doesn't require you looking through the back room at the record store in an album box hoping to find, a needle in a haystack.
And let's switch to the real world. Fred, I know you have a particular interest in what you sort of call location-based entertainment, right? Sports venues, live concert venues. What's the health of that market? How should we be thinking about that?
I mean, I look at who's been to SoFi Stadium, who's been in the Sphere. A lot of people have been in the Sphere. Okay. And when I asked this question 2 years ago, nobody had been in the Sphere. I mean, are they amazing or what? I mean, even 6 or 7 years ago, you couldn't imagine anything like it. I mean, people ask me, like, I've been in the Sphere 13 times. They're like, oh my God. I was like, well, have you been? And they're like, no. I was like, it's mind blowing. I mean, if you love live music, it's unlike anything anybody has ever seen before. And it's becoming normalized. Right. I mean, these venues are amazing. And with the contracts that people are paying now for NFL rights and for NBA rights, I mean, it's only going to continue that way. And I think that's a fantastic element of entertainment. I think people want to go out. I think people have now gotten over COVID and realized, you know what? It is fun to go sit in a movie theater and see things that everybody else is seeing at the same time. It is fun to go watch your favorite team play on Sunday. It is great to go see a band that you fell in love with 25 years ago actually get up on stage and play in a venue that's as cool as the Sphere. And I think there's real demand for this. We're seeing it in terms of ticket sales and everything else. And I think location-based entertainment is going to be a real factor over the next 10 years in terms of wallet share for consumers.
We are seeing a demand for more live entertainment. We're seeing something of a rebound at the box office this year. It's up more than 20% in terms of ticket sales from last year.
Movies suck a little bit less this year than they did last year.
There are a lot of good movies out here this year.
Well, and I'm actually, just selfishly, I think people in Hollywood should be pleased that Paramount won. I don't know how Netflix, I don't know what Netflix was going to do with the studio. I think they would have kept it and done right by it. But, David Ellison's committed to a full slate of theatrical releases with the two studios he owns. And, I like going to theater. I want movies to be better. And frankly, they've been dreadful for the last 6 years.
And on that note, we've seen, again, higher ticket sales, more people going to the box office, and for different kinds of movies, not just the one big movie that's drawing everybody out there. So we're slowly seeing movie theaters come back to life after the pandemic. When you talk about a place like the Sphere, is that kind of entertainment scalable and then scalable to a degree where it becomes an attractive M&A target?
Well, like the Sphere, it's expensive to build a Sphere, right? There's going to be one in Abu Dhabi, but it's being funded partially by the Mideastern funds. I expect before they'll probably want in Tokyo. There are probably a half a dozen cities in the world that could support a concept like that. But just downsize it. If you own a record catalog like Sony or Universal or Warner, is there a 500-seat holographic concept like the ABBA experience that, could operate in the top 40 markets in the United States, right? I mean, I don't think we're that far away from that opportunity from a technology perspective. And I'd be happy to buy a Tuesday night ticket to see an ABBA show or a Fleetwood Mac show. Now, that's just me, but I do think that the technology is going to continue to enable more audience participation in live sports, as well as experiential artistic enjoy. I mean, who went to the Van Gogh exhibit during COVID when that was touring? I mean, I paid $70 to see a bunch of stuff. Yeah, it was better than the alternative. There's nothing else to do. But imagine some of the things that we've been talking about. I really do think there's a lot of opportunity.
And Tom, do you see any connective tissue between that and sports in terms of live sports venues and those opportunities?
Yeah, the miniature version of the Sphere is Cosm, and Cosm's a fantastic experience if you haven't watched your four favorite sports.
Well, for those who haven't been to Cosm, which is still relatively new, explain the concept. I've walked by it, and you can see that screen from 5 blocks away.
Right. Yeah. So it is a mini sphere. Effectively, it's immersive. But what's critical about how they do things is they actually make deals with the leagues so that they have special camera placement at the games that truly make you feel like you are at the game when you're watching that event, and it's fully immersive. And of course, it's got like that sports bar feel where you can order the, chicken wings you shouldn't eat and the more beer than you really need to have in your diet, all that. Like that's all there. The food is actually very good, but the immersive experience is incredible. And it's a fraction of the cost of going to buy a ticket to the game. And it's a pretty close experience. I mean, outside of, the guy sitting in front of you standing up at the stadium and all the stuff that people get irked by. So I think, and they're building more of those. I think Mark Lassery's group owns that outfit, right? And they're also now being used for film and other immersive experiences. So I think there'll be a proliferation of those smaller kind of versions of Sphere.
Well, what other areas are, do you think are growth markets right now in the entertainment space? It sounds like live entertainment, now that it's made a post-COVID comeback, is one of them.
Definitely live entertainment, definitely the creator economy. Within each of and sports, to your point, I don't know when that runs out of gas, but even within the entertainment industry, there's a lot of technologies that are helping to solve problems that are a little bit more subtle, like how is advertising measured? Like there's a lot of room to disrupt that industry. The linkage between content and commerce is something we've talked about for ages, but it just keeps getting more and more linked. Within advertising alone, when you think of, I always think when I look at Instagram and I think of something, it's there, and then it follows me around on everything that I do. And then I'll watch CNN and be targeted an ad for a drug that I'll never have to take. Right. So like there's a lot of innovation that'll come there and a lot of growth that'll come out of that. I think on the product side, I think when you look at the products that we watch streaming television, there's a ton of growth to just how they can make that better, right? Increase the recommendation ability, increase the ability to use it between devices. So there's growth everywhere, that in particular where technology touches. But absolutely live is the one that's fun to dream about. I mean, I look outside my window here and see the Sphere, and The Wizard of Oz is playing, right? Like they've made more money in the Sphere, I think, than they did in the history of their box office as The Wizard of Oz. And I haven't seen that particular show, but everything I've heard about it is it's pretty mind blowing. So what a cool environment to be in, where something that old can come back in a form that's completely mind blowing for people.
And to switch gears for a moment, a lot of people who work in the entertainment industry, when we talk about M&A, when we talk about, what kind of companies are looking to merge in the future, we kind of think of like studios and really things on a big, large scale. But what are some of these smaller areas that you think look appealing, for consolidation purposes? Maybe like less sexy areas like payroll or something.
Less sexy would be one way to describe it. Um, scale matters at different parts of the value chain. Um, you know, having a scaled library and scaled production capabilities is going to matter if you want to run a globally successful streaming platform, particularly at the price points we are now. I think how people organize back, I mean, the bigger these companies get, the more they can organize some of that stuff themselves. I think the more interesting sort of opportunities around, who's being empowered by this and what does that suggest for service providers around the entertainment industry. And I think there are a couple trends. It's way more democratic today. I mean, there are influencers who are 24 years old making $10 million a year. They don't have any idea what to do with the $10 million that they have. Right. And they don't know how long it's going to go on. Right. I mean, you can be like hot today and gone tomorrow, but whether it's um, agents, talent groups, personal financial advisors, right? I mean, there's an increasing role for all of that, as this becomes broader based. And frankly, women. One of the highest growth areas in private wealth and in asset management is successful women in entertainment, because there's so many more of them today. I know they're not as many as people might want, but I mean, there's so many more today relative to the overall. And it's a very unfocused on demographic, but the amount of success and financial reward and wealth that's being generated by some of the new, like what Reese Witherspoon's doing and all the rest of that. I mean, it's not inconsequential at all, and it's changing the shape of private wealth, and it's changing the shape of how people want to get advisory services in Hollywood to be much less male centric.
I think not all M&A is consolidation, right? You look at the Netflix deal that you brought up with Ben Affleck. That's not about consolidating. It's about bringing a capability in house that they think can serve their enterprise. You look at some of the best M&A deals in entertainment were around IP, based on the fact that the big enterprise of Disney or Warner's or whoever it was could do more with a piece of IP that they owned than something that they were continually renting. So I think there's always going to be that happening as value is created, is going to be realized and captured by others.
Hmm. What do you think, Tom? Any areas that are good for acquisition targets in the next 3 to 5 years?
Yeah, I mean, I think you named a few, but and some of them are probably here exhibiting. I think the Hollywood is the content industry in Hollywood is steeped in tradition, but also steeped in systems and procedures that in some respects are antiquated, but we're still applying some of those on a day-to-day basis in how we function and run those aspects of the business. And I think they're ripe for disintermediation, they're ripe for disruption, and with the right people coming in and seeing that, there's an opportunity for sure. A lot of the support systems in how we create and distribute content um, are I think in a position to, whether it's consolidation or reinventing themselves certain ways, using AI, using new technologies, and modernizing their systems.
And how helpful is the regulatory environment right now? It seems pretty friendly to this.
We'll see. I think the current regulatory environment is more commercial than some we've had in the last 20 years. Um, no is not just the pro forma response to everything, like it has been for most of the last 15 years. You know, we'll see what happens with some of I guess the Tegna situation in California now, and the Live Nation situation and the Paramount deal. But I think there's a path for most of this stuff to get done, and there's not a public interest reason to block this. I mean, entertainment is a massive and important American export, and the entertainment industry writ large has largely been an American industry, and I hope it stays that way. But if you make it too hard to do entertainment in the United States, it'll move, because everything can move really easily now. But there's so much talent here. There's so much creativity here. There's so much center of gravity for what the last 100 years has brought to the world of entertainment. I'm pretty optimistic that's going to continue.
Yeah, I think in past years, there would be deals that were thought of and never tried on the basis that it would be shot down. I don't see that as much right now. I mean, getting things done is always tricky, or is always has its challenges. But I think in this moment, people are trying to do deals, and I see that continuing for a while.
I agree. I mean, look, regulation is a fact of life for deal makers and lawyers. So regardless of administration, regardless of the time we're in, we're always dealing with it in some respect or another. And I think, it's maybe an environment now for certain types of deals are more amenable for regulatory approval, but I also think there are others that are less, and it depends where you are on the spectrum of, the deal making and who you're dealing with.
Well, really appreciate all of your insights. We're going to spend our last couple of minutes opening this up to questions. Does anyone have a question here for Tom, Eric, or Fred? Yes. We've got a microphone coming around.
Hi, thank you for this insightful discussion. What's your view on media? I mean, everything has been about entertainment. Is there anything on broadcasters? Anything which you think is good, they have a future? Because everything's getting are sitting at the NAV for crying out loud. I just know.
Like more like news media or
News media, and broadcasters.
I mean, I don't necessarily separate broadcast, the transmission versus the content. And when you look at YouTube TV, or you look at whatever you use at home, Charter, or you look at Amazon Live, they're all starting to look pretty similar, actually. So it's just the preference and the economic preference of the person who's using it. But a lot of the content is the same at this point. On the news side, one of the companies I love watching is the New York Times. And the New York Times outperformed NVIDIA last year as a stock. And what they've done is that they have a great brand. They have a daily habit of people who are consuming it. And they figured out what else you can add on to make it a strong business. But, if the New York Times, which was a newspaper, can figure out how to evolve their business in a way that works economically, others can as well.
Well, I like hearing that.
They've addicted everybody to Wordle.
That helps.
Smart. Good question. Oh, we've got time for one more question. Yep, up in the front. We've got a microphone coming around.
We talked a lot about like the bigger mergers and acquisitions, but for those of us who are acquiring smaller companies in the production world and in the live event world, what kind of advice would you give to those who are doing that? For the record, I've done 3 so far in the last 2 years, but again, there's a different learning for each of those. What advice would you give to?
Everyone's looking this way. Maybe they're looking at you. Well, look, from the legal perspective, diligence is incredibly important, legal and business diligence, but also understanding not just the business as it is today, but where, it's going and where the market is going. Because you can look at a business today that has reasonably attractive cash flows, which Eric and his team would look at and say, here's the multiple, that's a good price, or that's not. But what bankers, and mostly bankers, but with the support of lawyers, will do is really try and help you understand what else is going on in the industry that could impact those cash flows, whether it's AI, where we get questions from clients that are acquisitive about what's going to be the impact of AI on music, what's going to be the impact of AI on film, or other, changes in consumer habits, those types of things. So I think it's really important to just be able to look around the corner when you're doing those deals.
I think it's, companies are collections of people, and alignment and incentives of the people that matters is like the most important thing at the end of the day. And people behave relative to their incentives pretty often. So you have an opportunity in an M&A deal to spell all that out, but that having done this for a long time, that's the most important thing.
It's really easy for people in our industry to look at cash flows and financial results and base everything off of that. With what you're talking about, there's no substitute for talent, right? I mean, Taylor Sherritt, Aaron Sorkin, David Ellison, right? I mean, there are people in entertainment in our lifetimes who are just talented and they're going to be successful. And if you can identify those people early, I still have a copy of Teardrops on my guitar, Taylor Swift's first album when she was 15. And I was like, she's going to be a star. I didn't think she could be this big a star, but I couldn't monetize that. But there are people who do, right? And if you make the right bets and you're good at identifying that potential, it can be really, really profitable. Not everybody is.
Well, thank you so much for your insights. Everybody, give it up for Tom, Eric, and Fred.